Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to be running down some of the time frames on the Bitcoin chart and especially looking at one particular pattern that seems to be developing on the monthly chart. It's a pattern that I call the mirror pattern, and we'll have a look at exactly where this mirror pattern is leading to in terms of a price target for the end of this month. I'll also have a look at the pi cycle and look at the fractal patterns that developed around those two particular moving averages. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please do your wider research before you make any investment decisions. So with that out of the way, I'm actually going to start off with a bit of personal development work. I know quite a number of you who come here just for the personal development and not really for the technical analysis, and that's fine. And we haven't done personal development for a while, and I'm going to give you something absolutely earth-shattering, and that is, it's a quotation I actually posted on my Twitter account last week here. And as you know, I post quite a lot of charts and everything else regarding personal development in between my videos on the Twitter pages here. And if you want to join me on the Twitter, then just go onto the link below all of my videos. So coming back to this quote, this quotation can actually literally change the direction of your life. And let me give you a little insight into this. So the quotation basically says that when you no longer care what other people think of you, then you have reached freedom. Life truly begins the moment you realize you don't have to prove anything to anyone but yourself. And what this really means to me, the way I take it, if you look around you and ask yourself a simple question, how many people do you know that are successful on any measure of success? And by measure of success, I mean things like career fulfillment, positive mental attitude, health and fitness, relationships, financial independence, etc. So if you look at many of the areas which I've looked at regarding success, then the ratio of the 95% to the 5% is a common ratio that always pops out when you do your research on these measurements. And one test that you can do to determine who is in the 95% camp and the others who are in the 5% camp is to ask people around you what their goals are for the next 1 year or 5 years, i.e. what do they want to achieve in that time period. And if they look at you with a blank expression, you will know if they are the 95% or the 5%. So when you realize very quickly that 95% of people are not successful on any measure of success, then ask yourself a question: why would I actually care what those people think of me? And that thought will then help you to carve your own destiny, your own direction of travel, which will be far, far better and far more fruitful than the other 95%. So I hope you found value in this quotation. On to the technical analysis, and I'm going to show you a mirror pattern that's been developing, and I alluded to this in one of my previous videos. If you have a look at the top of this chart, what you'll see is what a pattern we called, and I mentioned this in the last video, called the evening star. And this is a pattern that's the exact opposite of the morning star, which I mentioned in my Twitter last week over here. So what you get over here as an evening star pattern is a 3-candle setup. The first candle setup at the top here is what we call the Marubozu candle. Usually it's one without any wicks at the top and the bottom, but as long as it's a solid candle like this, so you get a big solid green candle followed by a small bodied red candle, and then that's followed by a solid red candle on the other side. And what you then get is what we now call a evening star pattern, and that usually spells the fact that the next candle after it is usually a red candle, i.e. the bias is towards the downside and it's a bearish pattern. And what we've got over here currently, we've got the opposite, the mirror effect of that pattern developing very strongly over here. So what we've got here is a big red solid candle followed by a small bodied candle, which is then consequently followed by a big green solid candle over here, a Marubozu candle. And this pattern is a morning star, which is the quite opposite of the evening star. And the question we have to ask ourselves is that after the evening star pattern, we know that there's going to be a red candle with a high degree of probability. And I mentioned at the end of last month when we printed this green candle that with a high degree of probability we're going to get a green candle over here. And at the moment it's certainly playing out, and we've got around about 7 or 8 days to go. And the question is, how far can this candle go up here? Let me take you through in history, because this pattern, the morning star, is a very common pattern that you normally get at the end of a very strong and brutal bear market. So if I take you to the first 4-year cycle, which ended here in November 2013, within that cycle we had a mini bear market, and at the bottom of that mini bear market we got a morning star pattern over here. And if you have a look, the first candle after the morning star was this green candle, and if we measure the increase from the end of that month's close to the top of the next candle, that gave us around about a 50% increase as a result of this morning star pattern. And if we move on to the actual end of the cycle, what we got here was an extended morning star pattern. So you get a red candle here, lots of small bodied candles over here. So it's an extended morning star, and then you get your green Marubozu candle on this side here. So if we take the close from here, the next month's candle went up by, again, around 55%, around 50%. So as you can see, there's a pattern developing. So let's go to the next cycle. Once again, you've got a Marubozu candle here, extended small bodied candles over here, and then a breakthrough candle on the other side. And once again you get another green candle over here. So from the close of the previous candle to the top of the next candle was around 70%. So you can see that these morning star patterns are extremely powerful. So far in the previous 12 years we've had 3 morning star patterns at the end of the bear market, and they've given us 50, 50 and 70% increases after the morning star pattern. So if that was to follow over here, and we've got around about 7 or 8 days to go, is that pattern telling us what we're about to do in the next 7 days or so? If that was the case, if we measure the close of the last month's candle in January, then a 50% increase would take us to exactly around about the $34,500 mark. I'm not saying it's definitely going to happen, but there is a clue in what's happened in the past. If it's not going to be 50%, maybe 30% or 40%, and only time will tell. But it's very important to actually look at the fractal patterns of the past, and that gives us a clue that with a high degree of probability, we're not certainly going to be coming back down here. It doesn't look that way. It looks like that this candle for at least the next 7 days is more likely going to be going to the upside rather than the downside. And if you look left here, it would make sense that anywhere between 32 and 34,000, because as you can see, that's the bottoms of these support lines over here. So that could make sense quite easily for the price to go up to those levels. Only time will tell, but I thought that would be quite interesting and I wanted to bring this to your attention. Okay, I'm going to move on to the pi cycle, and this pi cycle is one indicator you must have on your charts because it's going to give you the top and the bottoms throughout the bull cycle. And I'm going to take you back again here to the first cycle. So in the first part of that cycle, like I said, there's a mini bear market that occurred over here. And once we moved out of this bear market, we can see that the price came up to this red line, which is the 111 simple moving average. And before the halving, once we'd crossed the red line, the next move was to the green line, at least here, although it overshot in this case here. But the thing to remember here is that once we went past the halving, so having crossed the red line, gone to the green line, after the halving, and once we crossed back above the green line over here, was the parabolic phase start that we ended up at the top of that cycle there. And this was all within the first cycle, which ended here in November 2013. And when we got to the top of that cycle in November 2013, a similar pattern unfolded once again. So if we move to this cycle, you can see here quite clearly. So we came to the bottom of this bear market, made a double bottom, and after the double bottom, when we crossed over the red line, we made an attempt to get to the green line over here, and after that the price oscillated in between and it even came back up to the green line once again, all before the actual halving, this pink line here. And notice one thing, after the halving, just like it did over here, once we get past the halving and then cross above the green line, which in this case was over here, that was the start of the parabolic phase of the cycle over here. And that culminated in the top at the 20,000 level in 2017 December. So you can see quite clearly it's the same pattern that seems to be developing over and over again. So in the last cycle that we had, if we have a look at that one now, a similar pattern unfolded. So we double bottomed over here, went past the red line, went to the green line, got rejected from there, and after the halving. So the question is it the same thing that's happening again in this current cycle? Well, let's have a look. We've got the halving over here. We've had this brutal bear market down here, and we made a double bottom over here, and we've just crossed the red line. So the next stage is to get to the green line over here. And before we get to the pink line here, the halving, we should be oscillating between the red and the green lines along the way. However that pans out, it really doesn't matter. We're never going to know the tops and the bottoms, but what we do know is that the framework of those tops and bottoms usually stay within the green and the red lines over here. But once we cross over after the halving, our expected end of this current cycle is at the end of 2025. So once we cross over the halving line here, and wherever this green line is going to be over here, then once the price crosses over there, that will be the actual beginning, the trigger for the parabolic phase of this current cycle, wherever that ends up. If it's 100,000, 200,000, 300,000, we'll have to make a guess of that nearer the time. But this is the bigger picture, the aggregate view. When you just step back and have a look at the charts, that's what it's telling you with all these indicators. And the reason why this green line is very, very important, I showed you in the last video of the possible price target for 2023. And if the price is going to come up to the green line, guess where the green line is? It's exactly at the $50,000 mark, which was our target for 2023 based on the previous cycles, when I showed you that when you do the Fibonacci retracement for each of the previous cycles, then the price comes to at least to the 78.6 level on the Fibonacci retracement. And this one here, of course, comes to exactly the same price here. Is that a coincidence? I'll let you make up your own mind on that. Okay, moving on to the 60-day cycle that we've been looking at in terms of the framework for the Bitcoin price. I've moved the lines now as per the previous video that I did, and I said that maybe the cycles have moved a little bit here, and we've got to always be flexible and neutral. And when new information becomes available, we can't get stubborn. We have to then take that new information into account and then make sure that we're up with the events with the Bitcoin price with a high degree of probability. Again, we can't confirm that. Nobody's 100% sure, and you can't be. But in all probability, the cycle ended around about the 40 days mark from over here, which is not uncommon when you see a double bottom pattern going on at the bottom of a bear market and then moving very quickly into a big rally here. So what we've got now here is we're going into the mid-cycle around about the middle of March, and we're finding resistance here at the 25,200 level, which was the level we had always said when the market started to rise over here. And we said that the 25.2 thousand mark is going to be the main key resistance point. Now here you would normally expect a rejection down. However, just like over here, we were consolidating at a high point, and then that led to this rise over here. And once again, instead of having a rejection here, we were consolidating at a high level. And while we did have a little pullback over here, it still went up to a higher level. And once again, we seem to be consolidating at a higher level, which gives the impression that we may be wanting to move higher towards this midpoint of the cycle and make another right translated cycle. So this level could be anywhere between 28 and 32,000, as we mentioned last week. And that's based on these figures and these resistance and support lines over here. So if you look at the top of this channel here, that's at around about the $32,000 mark. And the bottom of this support line here is at around about the $28,000 mark. So this is what we can really expect, the two main levels now going forward. And as I showed you in the previous analysis here on the monthly chart, We could even go as high as 34,000. And that would be based on the support that we got around here when we came down at this point and this point and this point. Currently, as you can see with the daily candles, I mentioned this in the Twitter page yesterday, that we had actually an outside bar bearish candle over here. Now they usually play to the downside. However, when we look at the volume on this candle, you can see that the volume is actually not very much. So although it should be a high probability play, the volume would suggest, because it was the weekend and yesterday was George Washington Day in the USA, so there wasn't very much trading going on, so the volume would suggest that maybe this is not going to play out over here. Just like this candle here, which was another outside bar candle. But once again, the volume wasn't really that great over here considering what had happened previously. So this one didn't play out and went to the upside, and maybe this is going to do the same over here. So only time will tell, but we'll see whether this plays out to the upside or downside. But certainly, the fact that we're now in a new cycle and the midpoint is over here in the middle of March would suggest that we're going to have another little run towards the mid-cycle high over here and make another right translated cycle between the $28,32 and $34,000 mark. And my strategy is, for what it's worth, please remember, this is not financial advice. I can only tell you what I'm going to do. And many times I've been wrong in the past and many times I've been right in the past, because nobody really knows the future. All I can do is to share my view, my knowledge from what I understand from the charts. So my strategy is over here is that we are still in the early stages of a 4-year cycle. So we're only 2 months in over here. And what we need to do is to take advantage of that and let it play out and not get caught out by the need or the urge to take profits around these levels. And the danger for me is to get over smart and try to be very cute and try to make a sale over here in order for the market to come here and pick up more units before it goes here. And the question for me is always, what if it doesn't do that? And the charts are telling me anyway that with the higher degree of probability that the movement is more to the upside than the downside, and only time will tell there. So for me, it's very important to let the market unfold and let the market take us to higher levels to build up the portfolio. And these resistance points are really designed to shake out the weak hands out of the market. So the best next place would be really at the mid-cycle point, i.e., as I've just mentioned, the 28, the 30 or the 32. But everybody's got to do what they need to do according to their own strategy. So on that note, we'll end this video. And if you found value in this particular video, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.